I want to steal a little bit from Mr. Simpson today and focus on silver. And we've got with us a great guest, someone that I followed on social media for a bit of time, and I've learned a lot from, Tanner Atchison, who is a technical trader and has a long family history in the silver market. And we have a lot to discuss here because there is a lot of upward momentum in the silver market right now, but also a lot of external downward pressure. And Tanner has the knowledge to share as to what is happening in that market and why we have what's building from the bottom and what's pushing down from it up top. So Tanner, are you with us?
Hey, what's going on, Don?
Great to have you. Thanks so much for joining us. So before we get started, Tanner, I introduced you as a technical trader. For those that aren't aware in the audience what a technical trader is, just explain a bit about what you do.
Yeah, so pretty much what I do is sit in front of two charts, two computer screens, in the morning for a few hours, and I trade based primarily gold and silver and some currencies. I'll trade the pound yen, pound US dollar yen, just depending on what's setting up for the day. But what I do is I watch, what's called candlesticks, and as they form certain formations, it signals me to get long in the market or short. And I'm probably 90% technical in the market and probably 10% fundamentals, meaning I take in 10% news and factor to help, guide me in the correct direction. So, yeah, it's nothing too crazy.
And how did you get into this line of work? What led you into this line of work?
I guess two things. So I guess we can kind of start with my family's background.
Yeah, please.
My grandpa, he was accumulating a lot of silver back in the 60s. So back in the 60s, he started buying up a lot of silver. And if I'm not mistaken, I was looking at a few things of his. Unfortunately, he's no longer here with us, but I was looking at a few things of his not too long ago, and there was like receipts of $3 silver and $5 silver and $6 silver. So he got in at a crazy discount, and what ultimately happened was the market got squeezed, and you've seen price pop in the late 80s to 48, 49, $50 an ounce, right?
Right.
So what happened was he ended up calling off of work for a few days, and he was in and out with suitcases and silver and selling it off. So that's kind of how he made his little bit of fortune in life and, retired. And he never made a lot of money. He never made the American average wage. His family was pretty poor. I mean, this is the kind of guy that would take stocks and sew them into his pockets when they wore out, right?
Right.
So, I mean, he only got a few shirts a year, like one pair of shoes from his parents. He was walking home from school one day and ran into a puddle of water and took his shoes off and walked through it with his socks. So this is the kind of family they came from. He was like a stacker, a hodler, whatever you want to call it nowadays. But, yeah, I mean, essentially once that market popped off, he sold like literally right at the top. I think he sold around 46, 47, 48 bucks. So that, starting with the grandpa, that's kind of how the family history started. And then it trickles down to my dad. So my dad, too, he's been trading now for 35 years. He bought his first ounce when he was 18 years old. And I think he probably did a lot of his accumulation in silver, if I had to guess, from 2013 to 2021. He was buying back in early 2000s, price popped to 50, but, he was doing okay at the time with other things he had going on, and he as well ran a business too, so he never sold out of it. And ever since, he has just continued to accumulate, and when the prices came off all-time highs and trickled back into a range for, 2013 to 2021, he really put some money to work there. So that is where the other part of the family came into it. Now, as far as how I got into technical trading and more dabbling into the currency market, some kind of cryptos are really what got me into this. And then I was gambling on earnings for stock companies, companies in the stock market. We could talk a little bit about that too. But what happened, one of my buddies, he owns Cars and Coffee St. Louis. So there's a lot of wealthy people that bring out exotic cars and this and that. And ever since a kid, I've loved cars. So I take my car out there too. And one day I met this kid. He's pretty young, I think maybe 20, 21 at the time. This was a few years ago, maybe 4 or 5 years ago. And he made a killing off of the crypto market, like probably 200K essentially overnight. And he was explaining it all to me. So I had him come stay the night with me one week. And when we had another car, I had him come into town, stay, because he lived a few hours away, and I had him teach me some of these things. The next morning, we went to one of the car events and went out to eat and just talked a bit more, and he went on his way. And obviously, I went down the rabbit hole on the internet, reading all these things and studying all these charts and listening to all these people talk about how it's great. And, you trade for a month, and it's Lambo and Ferraris, and come to find out, it's all a lie. So it has its ups and downs, but
absolutely.
It takes a few years.
Well, I want to focus on the silver aspect of your knowledge, and why you particularly focus on that, particularly on your social media presence, on your Telegram channel. I was drawn to silver because, unlike gold, which seems a bit unattainable for your average working American, silver is actually quite easily obtainable, at least at this point, for the consumer market. But there's a lot of things happening in the silver market right now that are probably not being discussed at a mainstream level. And I wanted to bring that to our audience. So talk a bit about what's happening right now in the silver markets, both from a consumer standpoint and from what the banks and the Fed are doing.
Yeah, so there's a couple interesting things with this. It's getting to be a hot topic right now, and you see some of the Wall Street bets groups, they're getting into it. They're trying to squeeze the silver price, which is pretty idiotic to me. I don't think that's in that way. I don't think it's ever going to happen. People don't understand how big this market cap really is. But we've seen price come down, and it ranged from like 2013 to 2020. And what we started to see was during COVID, what happens here is, when people start to get nervous, or there's, when you hear blood in the streets or uncertainty, people flood to safe haven assets. So a safe haven is, even some currencies can be like the yen, but gold and silver, they serve as a safe haven. And the thing that I like about silver more than gold is it has a pretty significant amount of industrial use. So when you start to get the whole world that gets nervous about a geopolitical event or just something going on in the economy, they tend to flood to these things. And that's why you'll start to see, like, I'll watch the premium price on silver. Sometimes, like at the peak of COVID, when you went to buy it, that thing dropped, right? We've seen silver fall off the face of the earth, maybe $10 an ounce. But if you went to a dealer to buy that, their premium on there was still $25-$30 an ounce. They knew better than to get rid of that, because me and my family and friends, we immediately started looking. Hey, this is a fire sale right now, right? So you get these points where there's these safe haven assets that a lot of people tend to flood to, and we've recently seen a big pop in price, and price has consolidated. A few other things that we might take into consideration. Some things with the banks. Look, I'm not a huge conspiracy theorist, but I call things how I see it.
Sure.
Some of these banks, they are heavily on the short side. It's not a conspiracy. It's pretty well known at this point.
Yeah,
one way that you can view this, you take a look at Nav, the guy who caused the flash crash in the stock market, I think in 2010, he was spoofing, right? So people think these markets can't get manipulated, but it was clear as day. And what I mean by that is, this guy, he was taking these orders that he never intended on getting filled, and he was really screwing with the market algos, and he made a killing off of this. And the U.S. government obviously knuckled down, found out who did it. In exchange for less time, I believe he taught them how to do it, right? You just seen what was the fine J.P. Morgan got hit with? The amount of money, spoofing fine. They got hit with $999 million?
Something like that, yep.
Which in the grand scheme of things, let's be honest, that's not a lot of money for these guys.
Right.
How much did they make over the years doing this? So that spoofing, it was suppressing the market, in my opinion. People say you can't do that, this and that. Well, how come this guy Nav could do it, but a big bank with much more money than him can't do it? A lot of people in denial here. So I think what happened was when we seen that price during March, COVID, fall $10 an ounce, I think a lot of these people covered on a lot of this, knowing what was about to come and knowing that they're not going to be able to take delivery on a lot of these. If people want the physical delivery off of their paper contracts, they're not going to be able to supply that. So they're going to get stuck and squeezed out of that and essentially collapse if they don't get rid of it. Shortly after that, we've seen price spring out of there all the way up to we hit $30 an ounce.
Right.
So I think we've got a lot of interesting things going on with this. I think the banks are getting the idea. Now you've got the whole Basel III idea too. I'm sure some people probably know about that. So now another angle we can hit with that, the banks could hold gold on their balance sheets in the form of unallocated paper gold without physical gold in tangible form, right? So these paper contracts that these banks hold are considered as good as gold when it comes to looking at how much capital the bank needs to maintain on its balance sheet. So what happens is under the old rules, there was no incentive to hold the physical asset, right? This new rule moves gold from a tier 3 asset to a tier 1, which allows physical gold to be counted for X amount of percent of the value for reserve purposes. Now, I've heard things from 80 to 100%. Do I think it's 100%? No. And I'll get where I'm going with this. You know, the gold and unallocated paper contract is no longer going to be considered an equal asset, meaning these banks, they're going to have to convert those paper contracts over to the physical asset, or they face being undercapitalized and essentially collapse.
So to kind of sum that up for the audience, a lot of the banks are holding paper assets that claim to be backed by gold or silver, but they're not actual physical metals. And so they're going to have to transition out of that at some point into actual physical metals.
100%. And you think about on their balance sheets, they have all this paper. And I mean, at the end of the day, you've seen everybody in COVID. What did they flock for? They flocked for the real asset, the physical, the something you can hold in your hand. They didn't say, I'm going to go buy SLV because I want a paper share.
Right.
Because at the end of the day, everyone knows when it comes down to the actual delivery on things and the true value is actually holding the metal itself. Everybody knows that. So people didn't flock to a paper contract. And, you know, this is just another thing that I think this is going on in a lot of European banks right now. I'm not sure about the U.S. banks, but we are starting to see more now regulation within the gold and silver market. And what that's going to do is it's probably going to drive them away from even wanting to trade it, to be honest with you. And that's just my opinion, right? So sure. I think long term, you know, this is definitely going to help. You've seen price suppressed for many years, and finally we popped out of that range, and all of a sudden these banks start to change their ideas and regulations and the way they can do things. I mean, it seems like a no-brainer to me.
What is the Fed balance sheet with silver right now, and what do they do, or what role do they play in manipulating the price of silver?
Man, the Fed, honestly, you know, what a joke. We've had how many now in history, and every single one of them failed. I think the Fed, what they try to do is every single time I hear them talk, they try to play everything off. Now, every investor, every single trader, or what should be taught in school is you should never purchase anything today with tomorrow's money, right? And every time you hear the Fed speak, this is what they do. Oh, we're going to be okay. Oh, it's going to be okay. Oh, it's going to be fine. This and that, right? So essentially, they just worry. They live today and they worry about tomorrow when tomorrow comes, which I think is a complete recipe for disaster. And you know, they're talking about tapering now and reducing spending and Yeah, this year, since March, we've seen the largest amount of assets added to the balance sheet. I think it was like $200 billion, not to mention the trillions that they printed to give America to sit on their butts and not go to work or not do anything, right?
Right.
There's a few interesting things that happen at these times. We look at the Biden administration. They hiked the capital gains tax. When was that? Back in April. April 20th or something. When you look at marginal tax rate relative to debt to GDP, when we have large economic or geopolitical events, such as like World War I, World War II, that debt increases relative to GDP, and then you see an increase in taxes. The same exact thing is happening right now. So they keep trying. The Fed keeps trying to play these things off. Ultimately, it's here. It's going to come. We already see the capital gains going higher. And what this does is it starts to trickle into other markets. This will also squeeze company earnings because people with higher taxes, they don't want to spend money. You know what I mean?
Right.
And then on the flip side of things, you still got unemployment, 14.6 million people still claiming unemployment. How many companies have you seen shut down? You drive by, you see signs. All of these things, that they're all closed down. So going back to the Fed, I think the Fed is really trying to, they're really trying to play this thing off. They call everything transitory and this and that. And I would beg to differ. I think they're trapped, and whether they have an exact suppression on the metals market, I doubt it. But what they're saying keeps these things from moving. And eventually, I think people are catching on to it, right?
Yeah.
We're starting to see it now. People are flowing into this sector like crazy. And, I think it's funny because we can talk a little bit about like the S&P or even Bitcoin. And honestly, when I look at any chart, this is the most undervalued asset when I take a look at any chart with massive upside potential. Yeah. To me, this is the best looking technical chart.
We have about 5 minutes remaining. I want to zero in on that. There are two statistics that really stand out to me, and perhaps you could comment on them. Number one is historically the gold to silver ratio is 15 to 1. What is happening? Why is that not the case right now? Why do we see silver so undervalued compared to gold?
I guess there's a few things. Silver lags to gold. So if you look to what I mean by that is if I had a chart prepared, I was going to send it in your chat, but honestly, we can redirect people. If you go to Telegram, you can literally type in my name. There's just shy of like 4,000 subscribers in there, and I post all things metals. I can post those charts in there. But where I'm getting at with this is I think on the next bull run, silver is going to tighten this up, and it moves percentage-wise more than gold. This next move, when we break out of 30 an ounce, you are going to see that gold to silver ratio shrink pretty significantly. When we bust that $30 an ounce, I'm watching that on the weekly chart. We close out of there. It's going to rip. It's going to rip to all-time highs. It's going to break the highs, and it's going to continue going. And honestly, when it catches, it's going to catch attraction. It's going to turn into a bubble, and it's going to get unsustainable, parabolic, eventually crash out. I mean, these are the things that they always happen. You take a look at Bitcoin. When it took off, the hype caught in. It got sucked into mainstream, and the hype drove the price. The S&P recently, you look at the tech stocks, this and that. I think that people are just looking for a little more. That next little thing that sparks it, that catalyst that drives it out of 30 is going to be where we see that shrink. The answer as to why it's not moving right now, honestly, I don't know. And I really don't care because we don't want to see an unsustainable market. People always ask me, why isn't this thing moving triple digits, quad digits, this and that. You don't climb a ladder and start at the bottom and end at the top in one step, right?
Right.
We've got to break these levels and then continue from there. And right now, that's where I'm at with things. I'm watching $30 an ounce. We get a weekly candle that closes above that, and this thing's going to rip. That gold to silver ratio you talk about, it's going to shift.
Yeah. How much of future demand for silver will be impacted by the lack of silver mines that are available around the world? There's talk that the silver mines may completely dry up by 2027. Is that something that you're watching?
silver miners, they're gold and silver miners. They're interesting right now. I think just a few things, like out of the top 50, 73% are now profitable on a free cash flow basis. I mean, this is the highest we've ever seen. They're tightening margins, tightening costs. These miners will continue to improve, and what this is going to allow them to do is be more efficient, right? More people are going to invest in them, and ultimately that and the price of gold and silver, they end up dragging each other higher. But the gold miners, I don't. You're going to see some. Obviously, electric cars are coming into play. They're going to use up some. So as that market continues to grow, you're going to continue to have more demand for the silver on that part. What is it? There's a pretty significant amount used in solar panels too. As we move to green energy, green new energy, whatever, all this stuff they talk about, we're going to continue using it there. And then you've got the industrial usage as well. Jewelry and this and that too. So yeah, I mean, I don't know if we run out by 2027. Some of these miners, during COVID, they weren't able to produce at 100% how they should have. So that also didn't help either. We didn't have that in circulation, right?
Yeah.
So I don't know what's going on out there 100%. My guess is there's a lot of buying pressure right now. And ultimately what happens when there's too much demand and not enough supply, things pop.
That's right. So, once again, this is Don from the Bronx filling in for the King Dude Mike Church. You're listening to the Crusade channel, the last live radio station standing, always on air and always online at crusadechannel.com. Tanner, in these final 2 minutes, 1 minute on, if you could comment on this statistic, and then 1 minute on any closing thoughts for our audience. Our audience has always been laser focused on the devaluing of the dollar. And one of the statistics on silver that really stands out to me, and you can get this from usdebtclock.org, that over 100 years ago, 1913, the dollar to silver ratio was 265 per ounce. Today, it's 3,091 cents per ounce. What does that mean in inflationary terms for the buying power of the dollar when precious metals have leaped that large of a ratio in over 100 years?
Cash is trash, Yep. The DXY is one of my favorite things to watch long term for more strength. It allows me to know when to lever back into the gold and silver market, watching the DXY long term. That is the dollar index. We are just inches away from a multi-year low. And once we fall off of the face of the earth underneath, 88 flat on the DXY, there's going to be a multi-year collapse on the dollar, which is ultimately what I'm watching to feed the next big gold and silver pop, right? So obviously with all the money printing and this and that, and like you bring up the dollar to gold and silver and this and that, all these ratios, I mean, it seems a bit out of whack to me. When has anything fiat ever worked out? And honestly, when has anything the government ever touched worked out? It doesn't.
Correct.
They suck at their job. They suck at what they do. And everything that they touch and work with fails. I mean, look at anything and everything in history. It's never worked. It won't work now. The dollar, we're holding on to the support right now around like 90 flat. Things are chopping around, but ultimately I'm waiting for the bearish continuation on this trend. And once we pop those lows at 89 flat, I think we see a collapse to a multi-year low, and that allows that ratio with gold and silver. It's going to start to tighten up. So where that goes, I don't know. I don't like to predict those kind of things.
Sure.
Who knows? I know it's going to tighten up.
Final thoughts for our audience. Things that you're going to be anything you haven't mentioned that you're going to be focused on and watching in the precious metals market in the months to come.
Yeah, within my long-term target. I know people are going to ask. I've got a long-term. I say a long-term. Next 2 to 3 years, it could obviously surpass that. I have to keep things reasonable, considering I trade every single day. I'm not just sitting and holding for 5 years and not ever looking at it. So I am looking at $91 an ounce. I think it's reasonable once the recent highs pop. At that point, triple digits are already in talk. It's going to go probably into triple digits. So Over the
And
next
that's
few
actually,
years, I would say.
I was going to say
What's
that
up?
makes sense. Just if you adjust the high of silver for inflation, I mean, triple digits is what that would be, right? You know, at the time when
Yeah,
silver was $50 an ounce, if you adjust that for inflation, that's triple digits today.
yeah, I'm expecting triple digits. I expect when this thing blows, you look at every other bull run in silver, it's parabolic, it's crazy, it's a freight train when it gets moving. So I'm expecting the same thing. I would get it, I would hold on to it. Worst comes to worst, the whole world's wrong. We're wrong about the trade, but guess what? You have something. You have real money, not
Right.
credit, right? Gold and silver, the only real money. Everything else, just credit. That's the way I look at that. So, it's always going to hold its value. It's always going to be there. You can always hold on to it, but ultimately, I think those triple digits come, and yeah, I think everyone hold on. Once this thing starts to blow, it's going to surprise a lot of people.
Great stuff, Tanner. Tanner, next time I'm on, I'd love to have you back and discuss this at greater length. I know you have a lot more to share. If you want to check Tanner out, Tanner, what's your Telegram channel if people want to follow you on Telegram?
It's literally just my name, Tanner Atchison, ATCHISON. You can also find me like Instagram. I don't have Twitter. I have Facebook, things like that. So,
okay.
Yeah.
Great stuff, Tanner. And I've
That's
learned a lot from you, and thank you for coming on today on the Crusade channel. We really appreciate it.
Yeah, thanks for having me.
Take care, Tanner. All right, that was Tanner Atchison talking about the silver market.